What's good, everybody? Today I took 2 fat scalps. I just want to quickly run through price actions from the day, go over a trade recap for both of those, and then run through a couple different secrets with the market maker model that allowed me to take both of these trades. So without further ado, let's go, baby. On every single Monday, and really when you wake up in the morning, you should be figuring out what the weekly objectives is, right? So this week, the weekly objective was the previous week high, because if we look to the side, and we're now at all-time highs on both indexes, there's really no extra targets except this weekly high right here. So what I did was I just simply marked this one out. This is now our buy side liquidity. And let's go over what the overnight price action was like, right? The daily price action, we were expecting to see this little dip eventually pull us to this high, which we saw. We were also expecting, zooming out, we're also expecting to see a bit of a bullish model to hit that weekly objective, because after all, it was our objective for the week, continuing the bullish trend that we've had over the past couple of months, right? So yesterday we had a little bit of choppiness, but this morning we woke up right about here, right about 9. I'll zoom down to the 15 minute. We woke up already with the long entry given to us, and it was a beautiful long, but the entry happened about 8 o'clock, so we weren't actually on the charts for it. So by the time we wake up, we're already in this range, right? We wake up, market pumps, there's really nothing that we can actually do except look at what the market's giving us at the exact moment. If we just took trades on a pump, we would either get faked out or we'd have a horrible risk reward, right? So what the important thing to do was today was to monitor these SMTs and actually wait for a good entry, right? So market opens, what we see is a pump, right? Zoom into the 1 minute, it was just straight up, right? We mark out first presented for a value gap. That was a key to price action clarity today. It happened about here on NQ. I'll quickly mark that out. This now becomes first presented. So this now becomes first presented, right? Beautiful. So we watch market pump, and we are watching this discorrelation happen because right on open, NQ takes this internal high while ES does not. So we're expecting to see, just based on the distance between the two instruments, that we can see an SMT occur, right? So we know that at some point in the future, we're going to be bearish. We don't know if it's going to happen right now, and we're not taking a trade based off of it, but we know that at some point in the future, we're going to be bearish, right? Simply watching the market, watching everything unfold today, we knew that with this strength on NQ, we wanted to see this previous weekly high get hit, right? So we waited, eventually we got a little bit of a hiccup, right? And we wanted to see my rules for taking a continuation trade or taking a trade somewhere up here when we have this huge range below us. The issue with this for me is I need something to happen. I need either a 15-minute for value gap to get pulled into. I need an SMT at the lows, or what I need to see is I need to see equilibrium of this entire range get met. Because then we'll be taking a long and a discount instead of taking a long and a premium, right? Or then we could get stopped out easily, right? So if we don't follow these rules, if we break the rules, you have to practice dynamic sizing. So the way we decided to do that today was just by lowering our size and putting a tight stop, right? So what I ended up getting instead was a 5-minute retracement to this for value gap, right? And NQ was much stronger, so we took it on NQ. We had the drawn liquidity literally like a couple of points away. So simply waited for this to get tapped into. The 1 minute didn't really give us clarity. However, we can zoom lower. This is how I love to use time frames. We can just zoom lower until we have clarity, and we're already at a point in which we expect price to reject, right? So simply just zooming lower gives us the clarity to actually look for an entry, right? So I looked down to the 30-second to 15-second. The 15 seconds where I saw what I want to see here. So we see our change of the state happen right here after this sweep of all this liquidity, and watch how price, if we zoom out a little bit, price is giving us a low resistant move, and then it gives us a high resistant choppy move to the downside until eventually it hits the point, and then we get a low resistant move back up. The lesson from this is that where we see low resistance on one side of the market, we can expect to see high resistance on the other side, and then low resistance again, right? So we see a change in the state. What I did was I placed my limit order right here. put my stop right below this low, and honestly, you could have placed it right here too. And then we target for full TP. Now, I didn't end up getting tapped. No problem about it. The only way you could have taken this entry is if you took it right after this change of the state and you put your thing right here, place your stop wherever you want to. That would have worked out. But I didn't get that entry, so I'm not mad. I'm not mad at all. But this TP got hit in literally one 15-second candle. So, I mean, it was a pretty efficient trade. Smart money was definitely in the market. You can see just through that manipulation, right? Another interesting to look at for journal is that if we mark out our manipulation leg right here, we can actually squeeze out a little bit of extra RR if we were to get that tap. Say we got tapped, right? So we put our stop here where we wanted to place it. We took first PT at this one. Next PT, we waited until we got that 2 to 2.5 level getting hit. We could have literally top ticked the move with standard deviation. And of course, you can just draw things in and say, okay, yeah, my standard deviation top ticks. But it's just important to look at and see at times how we can squeeze out a little bit extra R. Okay, next trade was more interesting. What this move did was it created a huge SMT that, when we go to mark out, let's go into the 1 minute. If we go to mark out, it comes to be something like this. So what we see is we see this SMT. Now, this is what we want for our market maker buy and sell model. We want to see liquidity of some sort on one side. We want to see a push up, a manipulation, a push lower, and then booms that liquidity, right? And most of the time, we want to see an SMT here to confirm it. If we don't see that SMT, our trade is going to be a lot lower probability, right? So we see this SMT, right? So putting this in perspective of the model, it would be something more like this, right? We had our SMT. So then our change of the state would be right here, our pullback to the fair value gap. Now, what we were talking about yesterday with the market maker video is how we can option select it. And if the market gives us a turtle soup or a liquidity sweep of this internal high, we can then look to take the entry lower. So that's exactly what we got here. We had our change of the state right here. And we had a high put in right here on that retrace to the fair value gap. Beautiful entry right there. However, we had this being a turtle sweep high, and we still see this initial high, which is the SMT high over here. It's the same point in price action. That initial high then becomes our protected high, right? So if we look at price action, what it does is it comes, sweeps that high and pushes lower. This is where we took our trade. So we didn't have, if you look at this model, the only thing, the difference between these two is this liquidity generated here. But the reason that we can replace this liquidity with all of this imbalanced price action is because it's still a magnet for price. If price is going to want to continue higher, it needs to rebalance first. If price is going to want to seek liquidity, the only side of liquidity, the only side of the market that liquidity is resting on is down here. There's no longer any liquidity up here because if we look, we've just swept this liquidity. So now this is a protected high. There's no point for price to come seek all of this because it already did it on NQ. So all we're looking at here is we have our sweep of liquidity. We zoom down to a lower time frame. This is literally a perfect market maker buy and sell model. And we wait for our displacement. So we're changing the state. We would mark right here. Displacement, we had a fair value gap. Keep in mind that displacement is what really made this trade. We have this fair value gap. I'm pretty much going to put both of them in because it was just imbalanced price action. Looking right here, where I took my entry was right on that change in the state. So I took my short opportunity right here on the change of the state. I put my stop right above this high. And then we looked for this trade for 3R. Now, this trade worked out because it was simply following the model, right? It was perfect displacement and boom, we had a push to these lows, right? Now, note how inefficient price was on the way here. This is when you see this inefficiency and when you see NQ hit take profit much quicker. It's on 1020 where here we put in this could potentially be an SMT, right? So we don't know if the market now wants to go reverse after making the SMT. So what we do is if the market's going to reverse, I'm going to put my stop to break even or I'm going to put it to an internal high. So I placed my stop right at this high right here, which I said if price is going to continue, it should not come up and sweep this high or stop now really, right? So what we did, that's trade management, right? We see this inefficiency in price and we're immediately more conservative. We can take some off our position or we can just put our stop to break even. It's whatever you want to do. Now, why did price speed up so drastically right after this huge move? Well, we know that if we seek liquidity, and we take liquidity the same way we did here, we made this big SMT, the next move that we're expecting in price action is going to be a rebalance, right? So let's look, where can we expect price action to rebalance to? Well, let's mark out our big range right here. We have equilibrium resting right here of this range. And if you wanted to take it of the bigger range, say you like this low or you like any of these lows, we still have equilibrium resting lower. But in my opinion, the real imbalanced price action was right here with this huge outsized move. So I have equilibrium resting right here. Next, we can go in to draw out standard deviation to see where does price want to pull to. Now, the way I would have drawn out standard deviation here is going to look a little bit weird unless you understand what I'm doing. I would draw standard deviation on this leg, considering this the manipulation leg. Why would I do that? Because if we look over here on NQ, this same leg, the same time leg, 958 to 1002, 958 to 1002, this now becomes our manipulation leg that sweeps liquidity. And if you look, it's the same thing, it's still aligned. You can literally just look at NQ, and until NQ hits this level, you can hold your profit on ES if that's what you're comfortable doing, right? So we have three things aligning right at this level. We have first presented for value gap, which we know is going to be a draw during the day. We have 2 to 2.5 standard deviation, and we also have 0.5 equilibrium level in this range. If price wants to go to any of these three things, we have all our bases covered. This is a good spot to leave runners. Now, why did price speed up so drastically? I don't know, but I put myself in the position to take advantage of it. So if I did want to leave runners here, which I didn't because I didn't like the inefficiency in price, I most likely would have held it until first presented for value gap. And look at that extremely accurate tap. Extremely accurate tap. Zoom in. Look at how price literally sought out that exact level before bouncing off of it. Price sought out that exact level before bouncing off of it. And then if you want to hold more runners, it's up to you to hold it to 4. It's up to you to hold it to this low. I mean, this would have been an insane bang. And I'm not saying, go ahead, yeah, take this. I'm just telling you that this is possible. This is 100% possible in price, right? So I think the biggest thing to look at today that lets you know it's okay if you didn't take this trade and get entered in on this big move down, but it's because we expect the price to move in high resistant and low resistant liquidity. It's two opposites of the market, right? We can look at low resistance liquidity, or we can look at high resistance liquidity by a move that's like this. It's very choppy. There's no imbalances in this move. We expect to then see price move with low resistance through to take all of these lows. We expect to do it relatively quickly. This right here is low resistance. This is high resistance. We can expect where we see high resistance on the upside, we can expect to see low resistance on the downside, right? So that is one thing that gives us a reason to take profits early during this trade right here, or play stop to break even, or not go for runners in this trade, because we see how price is moving so high resistant during this trade. We know, okay, maybe we could be on the wrong side of the market, right? And that's another reason that this big move today was really unexpected, because we have low resistant move to another low resistant move, which is never expected. If price truly wanted to rebalance, we'd expect to see price move slow wave and slowly eventually get down here before then giving us our high resistant move to the upside. We didn't see any of this today. We just saw a slow burn and then an eventual drop. This is not very great price action, but if you look, price still does its job. It wanted to seek liquidity. It still did it. Same even here. It didn't seek liquidity efficiently, but we still sought our liquidity. We still did what price wanted to do. Price has a job and it does its job. So this is what I think is the biggest thing to look at today, is the high resistance and the low resistance liquidity. Look at how the SMTs affected the market. Figure out how we were able to create this high quality position level right here by aligning standard deviation, equilibrium, and the first presented for value gap. I think those are the most important things from today's price action. Overall, this was a W day. I'm so glad you guys hopped on, and I hope you guys learned something. If you have any questions, just put them in the comments and I'll be first to answer. Overall, if you did not get into this move today, don't feel bad. Don't feel any kind of FOMO, because honestly, there was not a great high quality opportunity to get involved in this move today. But overall, it was a great day. Preserve capital. I'll see you guys tomorrow. Peace out.